Chris Pulver here, and welcome to installment 1 of my video series, Keep It Seriously Simple. The goal behind this video series is to help any trader of any ability level be more profitable. Doesn't matter what the instrument is. If you're trading Forex, trading stocks, commodities, futures, cryptocurrencies, the common denominator is market structure and price action. Okay? So I'm going to write down some phrases. Those are going to be subjects for my videos. If you have anything you'd like me to add, make sure you leave a like, leave a comment, give me some feedback on some other subjects you'd like me to do videos on, and I'm all ears. Okay? So things I'm going to address that separate full-time traders, professional traders, people that do this for a living versus your average beginner, retail trader that's been struggling. They're not that big of a difference. You know, all it really is to make money is mathematically, you have to put yourself in a position to make money. Whether that's bigger wins than losses, more wins than losses, or just having the confidence to find direction consistently. That's what this video series is about. Okay? Now, I will do a specific video on equity management. It's certainly not the most glamorous, but it is extremely important that we understand why we are taking trades, where we take them, what type of trade sizes we're going to use, and there are levels that we will be more aggressive. There are trade sizes we should step up and actually take a bit more risk because of the probabilities. Now, there's a saying from Mark Twain, history doesn't repeat itself, but it often rhymes. And I think that's really true when it comes to trading, because you'll notice that the market does do the same things over and over again, but it has these little subtleties, these little differences. The patterns that I used to trade 5, 6, 7 years ago that I was extremely on, my entire portfolio rested on making 10, 15, 20% just on pattern trades. Those patterns still exist, but they look a little bit different. I have to play them a little bit differently now, but that's okay. I've made the necessary adjustments. Equity management is a big part of staying in the market and surviving. I'm going to spend a lot of time on support and resistance. It sounds so basic, it sounds so elementary, but the reality is if we consistently identify lows and highs, guess what? We can buy low, we can sell high. Pretty simple. Okay? Trend lines. There is a certain way that I like to use trend lines, and there's a certain way that I see price behaving in and around support and resistance and trend lines. And I think it's pretty effective. It's really this simple. You have a left side of the trend line, you have a right side of the trend line. If you are waiting to sell, all of this is anticipation, all of this is confirmation. The hardest thing for a trader to do is be patient. So the patience comes in with, we are guessing at when the market's going to break and confirm that the trend line is breaking. Okay, so waiting for confirmation is really step number 1. This prevents a lot of stress. This might take more time. This might take days and days longer. This might take weeks longer. But I can promise you that trading gets a lot less stressful on the right side of the trend line. So again, look for that video under the series, Keep It Seriously Simple. That's going to be all about trend lines. Another thing I'm going to talk about is structure in the markets. Okay, utilizing support and resistance, utilizing trend lines, identifying market structure that we figure out what direction to go. If you can see that, but that's direction. All right, I'll erase that in case you can't see it. So market structure and also price patterns. Major price patterns that I have traded for years and years and years with great consistency, they're still there. They still exist. They might look a little bit different now, but I still trade the same price patterns. Head and shoulders, crowns, wedges, rising, falling wedges, double tops, double bottoms, flags, cup and handles. I've done classes and I have a video series on those over 8 years old. They still work. They're just little subtleties now that we have to pick up on. What else? Pattern, structure, trend line, support, resistance, equity management. Within equity management, I'll probably have bonus videos on things like going into a broker platform. Okay, I know a lot of beginning traders are having difficulties navigating broker platforms. You know, how do we buy and sell? Is there a charting platform that we could be using? So charting, I'll do some charting, you know, charting basics or charting 101. Think of some other things. You know, like I said, this video series, it's going to serve as a blueprint for you. So whatever you're looking for as a trader, whatever you want to learn, let me know, okay? So we'll do some charting basics. We'll do some charting 101s. We'll work with different brokers. We'll talk about price patterns. We'll talk about market structure. We're going to find ways to identify direction. Another thing, I'm going to go over here. So we're going to talk about manual trading versus robot trading. I have incorporated a lot more automation in my trading over the last couple of years. It's taken me years to have the confidence in my logic to automate it. You know, in markets like Forex or cryptos, it's a 24-hour-a-day market. I know that I'm not physically able to take trades. My robots are. But if I just left the robot to its own devices, it's only going to do what it's designed to do. And if it's not in the right environment, it's not in the right conditions, my robots will struggle. So it's important that we have a blend between our discretion and how we use those robots. But I can say this, robots will make us a lot of money. If utilized effectively, robots can make us a lot of money and make our job a lot easier. My days of getting up at 2 in the morning, 3 in the morning, working through the London session are done. I'm in the US, I'm in the New York time zone, Eastern time zone. I don't want to get up at 2 in the morning, 3 in the morning anymore. Okay? So having robots do those trades for me, getting up, you know, the robot's working 24 hours a day. All I have to do is keep an eye on it. Let's talk about equity management. Let's talk about support resistance. Let's talk about trend lines, market structure, price patterns. Then we can get into some of the specifics. Now, as a little bonus to all of you for watching and leaving a like and leaving a comment, I'm going to spend a little bit of time going into further detail on what I had in trend lines, and here's why. We already kind of started it. I gave you a little lecture on the left side, the right side. So let's have this be a little bonus segment to wrap up this overview. So let's talk trend lines really quickly. Again, I'm going to dedicate a whole module to it, but trend lines are incredibly useful. Think of it really this simple. If we have highs in price that we can connect, there's an effective trend line. If you take that trend line and make it parallel, a lot of times you're going to identify a channel. Now, from this trend line, this is a bearish trend, right? If we're going from highs to lows, making lower highs, lower lows, this is in a bearish trend. If we want to buy low, what are we going to do? You know, we're not necessarily trying to buy all of these dips. Why? Because if the market's in a bearish trend, we should be looking to sell high. Right? This is the best trade for us, is to sell as high as possible, as often as possible, until the structure changes. But this is the trend line that I'm after. This trend line right there is what tells me when it's now time to be a buyer. Okay? We have the left side of the trend line over here, which is anticipation. And we have the right side of the trend line over here, which is confirmation. So for those traders that have been trying to put in tops and bottoms, have been trying to buy highs and lows, we're looking to buy low. It's still the method, okay? But the market oftentimes will sit here and consolidate near these lows. Some fundamental news announcement will create the break, and it's probably not just going to go straight up. If we're going to get the buy signal, more than likely we need confirmation first. So step number one is going to be confirmation of that break, which is why it's on the right side of the trend line. Now, from there, we can take small trades on confirmation. We can reserve a second or third trade with a pullback or a retest of the bottoms. One of my favorite things to do in trading trend line breaks is to wait, is to see price confirm, wait for price to pull back or pause. This is where I usually get in. I wait for a little pause. This would be trade number one. If it comes back down to the same lows, that is trade number two. If it comes back and retests the backside of this long trend line, that is trade number three. All right, now we'll talk more about stops specifically and how to manage all this, but this is small trade sizes, and the probability is if we wait for confirmation, good things are going to happen. So if we're buying it small in this area, more than likely, price will go our way. Even if this is one giant swing to the downside, we're going to get some type of corrective move off of this. So let's say in Forex this was 1,000 pips. This pullback is probably going to be all of 300 to 500 pips. Could you buy low and make profit with a movement that's going your way for 300 to 500 pips? Absolutely. Could we do that with small trade sizes and build up and add more to it as it's going our way? Absolutely. Okay? So it's information like this, it's videos like this. Like I said, leave me a comment, leave me some feedback, and let me know what else you'd like me to talk about. But between equity management, trend lines, support resistance, price pattern, structure, and anything else, let me know. This is Chris Pulver. Keep it seriously simple. Let's make some money, these markets traders. Talk to you soon.